Hey guys, thanks for stopping by on my market report. This is Mike, and what we basically talk on my market report is what's affecting mortgage rates today. And we do these on a daily basis here. Now we do touch a little bit on the stock market because they do kind of correlate with one another. However, uh, we do primarily focus on the mortgage rates. So what we'll start off with is the economic reports. And the first item here we'll really look at is the new home sales on a seasonally adjusted basis for the month of January. So December's number came in initially at 842,000. It was actually revised higher to 885,000. Now, forecast is gone for 855,000 for the month of January, but it came in much hotter at 923,000, which is obviously very good news. So we did see a spike, if you recall, on permits, where however the construction was a little bit slower. But another item here we're noticing because of higher rates, we're noticing that mortgage applications we get every Wednesday have been dipping. So you can see the purchase side, even that dipped a little bit. Refinance has dipped quite a bit on that due to the higher rates rising these past week or two. Now go ahead and look at news. Sorry about that. Stocks are up this morning. They're taking a bit of a reversal here. They've been down for the last week or so due to high yields. There's a lot of concern with yields. Jerome Powell, the Fed chair, has been giving his testimony for Congress. Yesterday happened to be the Senate. Today happens to be going through a House committee, and he's been kind of touching on inflation. He made a comment today about inflation in regards to he thinks may take 3 years to obtain the inflationary goals. So before he hadn't really done that, but he did kind of put a time frame, and that kind of does correlate to what we saw before on the last meeting on the dot plot as to when before they start raising rates. So that was something to keep in mind, and he does feel that it will take a while before we get to maximum uh, efficiency in terms of jobs, getting back to jobs and everything. But he does see a silver lining coming in. Johnson Johnson, some good news by Johnson Johnson. The FDA approved, at least basically set the stage for them to be kind of coming out pretty soon. At least they kind of passed the first hurdle, and it looks like they could be another source for vaccinations that will be coming out as well. Last but not least, we're getting a lot of Fed speakers kind of out there giving their comments. So this is kind of helping investors kind of ease their concerns on inflation and the yields and everything else, and where what the Fed is thinking. So for a while, we weren't getting a lot of information from the Fed, so we weren't really sure. The investors really weren't sure what those thoughts were. So that's kind of helping ease a bit of their concerns with the mortgage the asset purchases that they've been doing. That looks like that will still continue. There'll be uh, they basically said that they'll communicate to the public or the investors that markets that the if there's any changes that they'll give them some time frame as to when these changes might occur. Uh, but it seems to be easing their concerns a bit. So let's jump ahead, take a look at what's going on with the mortgage rates as we really fluctuating today. I switched over to 2.5% coupon because rates been kind of rising. It seems to be more of what's in correlation to where the market is as rates have been kind of climbing than the 2%. So with this, we'll have a little bit more less volatility because we want the lower coupon rates because they're less volatile. I mean, you'll see a lot more volatility on those due to people tend to keep those rates. Now, let's take a look here. We got as you can see here, we got a lot of uncertainty. We're way down here. The stock market was down early on. Bond market was down early on. Testimony came in. We actually went upwards in positive territory. A lot of lenders actually came in with better pricing. So initially they came in probably with worse pricing, and then however they came in with better pricing once we reached here. Since then we have pulled back a little bit. We're down to about 9 basis points. So we've been kind of really seeing this roller coaster ride here in the mortgage-backed securities uh, markets, and it's going to be interesting to see what happens. But as you can see here, we got this uncertainty here. And yesterday we did pull back quite a bit from where we were and closed up 11 basis points. We were down for most of the day and then closed up in positive territory and up 11 basis points yesterday. So we'll have to kind of wait and see. Again, this has been a bit of a roller coaster ride, and this could change. We were hoping to see, obviously, some type of reversal here, and we're kind of due for one as we've been hitting these sudden lows for quite some time here. Let's take a look at what's going on with the yields. Yields were way up there. They're in the 140 range, well above 140 range. They have subsided a bit. They did break above that ceiling. As you can see here, we're up about 1.38 now, where we were kind of in the 136 range. Now we're up about 1.38. That's what we're seeing right now. All right, so mortgage rates are going to be very similar to what we saw yesterday. I don't think you're going to see a big difference from what we saw yesterday in our pricing in there. So with that price improvement right now, at that price improvement, I think you're going to see pricing similar to what we saw yesterday's close. All right, folks. So that's pretty much about it. If you guys got questions about anything I can help you guys out with, a little bit of background about myself. I am a loan officer. I do work with a national lender. I'd be more than happy to answer your questions regarding mortgage rates. If you got questions about any loan programs or getting pre-approved to buy your homes, to refinancing reviews, if you want me to kind of look at, see what you guys have, and if we can help you out, whether it's taking money out of the equity of the property, or if you're looking to just get a better rate, or if you're looking to go from a 30-year to maybe a 10 or 15 or 20-year fix, you want to take a look at those, see if those might be better suited for what you're looking to do and meet your financial objectives. So please feel free to reach out anytime. I'll be more than happy to talk with you or discuss a little bit further about what you're looking to do. And you guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.